Though the economy no longer seems wildly careening with excess growth and inflation as it did just a few short months ago, the Fed remains with its foot squarely on the brake. While inflation remains above target, progress in the fight against inflation has become clear. Monthly core PCE inflation, the Fed's preferred gauge, has been at the same or lower levels than its prior year comparable ones for 15 consecutive months now. More recently, a cooling trend has begun to emerge in the housing inflation series, which make up the bulk of the inflation overshoot. However, this cooling in inflation has been met by cooling in labor markets. Chair Powell himself stated that he would only be comfortable characterizing this as cooling for the first time now in a couple of years. That's perhaps unsurprising when we think now that for 3 consecutive months the unemployment rate has risen. Though still at a low level in the absolute, history shows that relatively small moves higher in unemployment, if unchecked, can accelerate very quickly. All told, it puts the Fed in something of a tough spot. Institutionally, their bias is to look as though they're fighting inflation when inflation remains above target. We think that data now makes it so the Fed is able to commence the 2024 cutting cycle soon. The level of restriction in the economy that was appropriate when inflation was closer to 5% no longer seems to be the case whenever inflation is closer to 2.5%. We believe that September will be the time when the Fed is able to complete its first interest rate cut. It is worth monitoring carefully any signs of further deterioration in labor markets between now and then. If that were to occur, it's a possibility, though the furthest thing from a probability, that the Fed could be forced to see cuts that would be of a greater magnitude than otherwise. However, we do still see, at the end of the day, room for the Fed to make 2 cuts by the end of the year, totaling a total of 50 basis points. That is not to say, though, that this isn't a particularly delicate moment, and anything that happens in regards to the labor market will bear even more scrutiny from the Fed and market participants than normal.